Well, European stocks are at a 14-month high today following that amazing decision earlier this morning from the German Constitutional Court. Effectively, what they did was kick into touch an attempt to prevent Germany from participating in the giant European bailout fund. It's worth about 500 billion euros, and Germany was slated to pay around 27% into it. Now, effectively, this paves the way for Germany to participate in this fund, the European Stability Mechanism, but it does come with some conditions. Germany's going to face a cap on contributions of about 190 billion euros, and Parliament is going to have to be seen to be involved in a lot of its decision making. This does make for a complicated arrangement between Germany, the fund, and of course the European Central Bank, which will use it as the respective conduit by which it will buy bonds in and around the European debt market in order to lower borrowing costs and try to stabilize the situation. So it's not home free and clear just yet for the stability mechanism, but nonetheless, this is a major hurdle that has been cleared, and as a result, markets reacted in kind. We saw bond yields for both Italy and Spain drop pretty sharply this morning, and stocks, as I mentioned, rise. The euro traded at a 4-month high against the US dollar, and we began to see a lot more risk coming onto the table in some other asset classes. What was also interesting was how quickly Italy seemed to take advantage of the ruling. They raised around 9 billion euros in short-term debt earlier this morning at an interest rate that was the lowest of this year and about a third of the cost that they were paying only a couple of months ago. So clearly the implications are inside and around European financial markets that this decision is going to have a clear and present bearing on the direction of trading activity in the months to come. We'll keep an eye on all of the updates, of course, inside the European Crisis live blog and on the broader website right here at theibtimes.co.uk.